JFD, just fair and direct.
Okay, hello and good morning everyone, and welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 10th of March 2021. So yep, welcome everyone, welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quickly let's mention our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which I believe you can find useful. And yep, please visit us here on jfdbank.com and click on the research tab right there on the top. And yeah, I believe you can find a lot of useful information. So, jumping into the charts now, the first one I want to pick up here is Nikkei 225. So yesterday, Nikkei did push higher. Today, I mean, Nikkei closed fractionally in the positive territory, despite kind of, let's say, the fact that the US equities yesterday rallied heavily. Nikkei here, for example, stayed a little bit on the modest side, and well, not to mention the Shanghai Composite, which I'm going to jump into next. But coming back to Nikkei, basically the still, yes, I mean there is still some positivity left, I would say. However, from the technical perspective, as you can see here, we do have a lot of obstacles on the way higher. So not to mention this 21-day EMA, which I talked about recently, and also this downside line. If this 21-day EMA fails, this downside line taken from the high of the 16th of February. And yeah, I mean, even if we push above the 21-day EMA, still there is a good chance for the sellers to step in. So that's why be careful with that. So if you want to look at some higher levels, probably wait for maybe a push above the current highest point of March, near the 29,996, or let's round it up towards that psychological 30,000 mark. So a nice good push above that 30,000 territory could do the trick for more buyers. For now, I will call any pullback here up to this downside line, I'll class as a temporary correction. So jumping into Shanghai Composite, yes, so closed slightly in the red, still remains above the 200-day EMA, and to be honest, not much has changed from yesterday's analysis here. So basically, what I'm keeping an eye on here is a potential idea of if this 200-day EMA, together with the 3,325 territory, continues to provide decent support, we could see a nice rebound here, a move back towards this downside line drawn from the high of the 18th of February, and then it will be very interesting to see if we can actually kind of maybe get a decline here again. But for now, let's keep it short and simple. As I said, all eyes are on this 200-day EMA together with the 3,325 territory. If that holds, we could see a nice rebound if it breaks. Now that's where it could become very interesting again for the sellers, because this would confirm a forthcoming lower low here, and by next target could be this 3,291 zone, marked by the lowest point of actually no, not the lowest point, but the low of the 13th of November of last year. So Shanghai, we're done with the Shanghai Composite, German index, DAX, and yeah, I mean, we've managed to close above this 14,403 territory I spoke about yesterday, and yeah, I mean, on one hand, everything's nice and dandy, I would say, and everything's looking quite positive. The fact that the cash index is still trading above this hurdle, about this 14,403 territory. That of course gives a bit of kind of positivity as well into the near term for the near term outlook. But once it starts falling below it, then I'll take a bit of a neutral stand. But if it falls below the 14,309 territory right here, marked by the yesterday's low, now that's where I will consider maybe a bit of a larger correction to the downside, and then of course we'll take it from there. The reason why I'm saying correction, because we're still trading above some of these upside lines, so that's why any kind of move lower here could still be seen classed as a correction, as a temporary one. But again, as I said, in order to consider that idea, we need to see at least a drop below the 14,309 zone right here. For now, I'm gonna stick to the upside, but very, very carefully, because we are at all-time highs. We are kind of yesterday we've created a new all-time high here for DAX, and if you want to be a little bit more on the safe side, what you could do here is you could wait for a push above the 14,475 territory right here. This way the index would confirm a forthcoming higher high, and you have, of course, the sky's the limit then. But of course, again, if you're not comfortable with the upside, probably sit this one out. I mean, if this is for you too much, I mean, you know yourselves better, guys. I mean, everybody knows their kind of preferences, so you can just wait this one out. I mean, wait for that reversal signal, and then maybe try to capture a bit of a drop here. But again, at the moment, we're not really seeing that reversal signal, so yeah, for now it could be still a one-way traffic here to the upside. But again, a certain criteria still needs to be met, because in order to kind of protect ourselves. So that's why I'm looking at this 14,475 territory as the probably more preferred option for the upside. Dow Jones Industrial Average. Now, looking at this picture, I mean, yesterday the index failed to create a new all-time high, but managed to reach that previous all-time high, or should I say, just actually, let me just double check. No, it did create an all-time high. So just by a few points, it overshot. Just a couple of points, it overshot the previous one. So wow, that's interesting. Okay, so. But the most important thing here is that it did create a new all-time high, but it drifted back again, back below this February high, near the 32,000 mark, roughly around here. Now, this is where it's going to be becoming very interesting, because, I mean, it's creating all-time highs, but struggling to remain above February's high. Now, okay, I mean, let's see if this is not going to result into a bit of a corrective move lower. If we take a look at the cash index right now, we can see that, yes, the price is trading around 31,791 territory. So we're below yesterday's close, but still above this little hurdle right here, this 31,644. I talked about this one, and this is the area that I'm keeping an eye on in order to, let's say, consider a bit of a larger correction to the downside. So if we get a drop below this, then yes, I'll go for a larger correction here to the downside. So keep your eyes on that one. DXY. So DXY drifted lower, corrected nicely here to the downside. Still remains above this upside line drawn from the low of the 25th of February. So anyway, everything's according to this plan that I've drawn here. So the idea here that I've mentioned on Monday, that we might see a bit of a retracement here. Maybe it wouldn't go for this 200-day EMA straight away. And now, yep, we're seeing a bit of a corrective move higher. However, now the way it's shaping up here, to be honest, I mean, what could happen, and I would probably just kind of be very careful on this one, guys, here. Basically, it could drift a little bit to the downside here again, test the upside line, basically collect a lot of sellers, and then reverse, then let's say show that it might break this upside line, kind of show a false breakout, and then reverse back to the upside, basically. This way, I mean, this is the standard kind of occurrence that we see in the market sometimes, guys. So probably in this situation here, I would say wait for this daily candle to shape up, unless it starts pushing above yesterday's high near the 92.50 zone, and then yes, we could go for those higher levels. But until then, guys, I mean, even for the downside, I would say for me to consider maybe lower areas, at least slightly lower areas, I would need to see a drop below this 91.60 zone. Also, a daily candle remaining below this area, yes, could do the trick for more sellers. But at the moment, we are in this situation, so we're trying to get out of we're trying to examine this situation at the moment. So yeah, keep your eyes on those two levels, guys. Gold, of course, enjoying the fact that yesterday DXY drifted lower. I mean, the dollar index depreciated, and yep, that helped this yellow metal to push higher. However, if you remember, recently I talked about this idea where basically I would consider a bit of a corrective move here to the upside. Let me just adjust this. There we go. But again, my target still remains the same. Looking at this lowest point of June of last year near the 1670 territory, we managed to come very close to testing that area, but didn't really do that. What I'm keeping an eye on here, of course, is this upside line here as well, and this upside line is drawn from the low of the 20th of May of 2019. Although it's a bit of a tentative one, but it's kind of a long-term tentative one. So yeah, I mean, for now, I mean, yes, it could drift a little bit here to the upside, maybe a little bit more. That's why my upside scenario is somewhere from around here, the 1760 territory. And the upside, I mean, short-term upside, because again, we cannot really talk about much higher levels because we're still trading below this downside line. So again, there's a lot of ifs here, and with gold, I would say if it stays somewhere below this 1740 territory, don't get kind of, let's say, tempted with higher levels. If it climbs higher, but let's say struggles with this 1740 territory, another slide here could be possible, and then we could maybe see that perfect test of this upside line together with the 1670 territory, and then we would take it from there. Because if that gets broken, of course, this turns out to be a disaster here for gold bulls, and yep, we could see further declines. But for now, let's keep it short and simple, guys. I mean, let's see how this is going to play out. For now, like I said, for the upside, slight upside, I would say, I'm looking at 1760 territory. That's what I would need to see a break off. And for the downside, as I said, even if it pushes a little bit to the upside here, if 1740 territory continues to provide resistance, then another slide here could be possible, because and if it does climb higher, we could also test this 21-day EMA, and yep, maybe if it might struggle to overcome it once again, because as you can see, this 21-day EMA somehow does its job and acts as a good area of resistance. So we'll keep that in mind. I can see in chat room, good morning, Carson, to you. I hope you're having a wonderful start of Wednesday. So yep, and of course, good morning to everybody else. I mean, who's just joining in. So yeah, coming back to the charts, quickly, Wti Oil. So I've mentioned this one briefly recently, and the idea here that I've discussed was that if we see a drop back below this hurdle, this highest point of February near the 63.80 zone, this is where it could become very interesting for more sellers. And of course, we could go for that slightly larger correction to the downside. And the reason why I'm saying correction, because, well, for obvious reasons here, because we're still trading above some upside lines here. But my main target will once again be the 21-day EMA, which, as you can see, continues to provide decent support. So, long story short, if the price continues to trade somewhere below the 63.79 territory, yes, my main target is the 21-day EMA. If it climbs back above it, I'll take a bit of a neutral stand, and this is where I'll have to reevaluate certain things here. So basically for the upside, I would need to see at least a push back above this 66 point. Let me just I can't see it. 66.60 territory, roughly around here, and that's marked by the highest point of 2019, if I'm not mistaken. Let me just double check. Yes, that's the highest point of 2019. A nice good push above it may open the door towards higher levels again. Litecoin. So interesting, Litecoin, the crypto continues to push higher. We saw the nice here move above this 185.75 territory, but to be honest now, I mean, because we have kind of violated it a few times, I will probably say that we'll get rid of this hurdle, we'll get rid of this level, no longer kind of maybe needed. What I'm going to focus on right now will be of course, this upside support line drawn from the low of the 11th of December, but from the shorter term perspective, I'll keep an eye on this upside line here, taken from the low of the 28th of February. And in a way, if it continues to provide support, then yes, the trend, the short-term trend is still to the upside. If you want to be a little bit more cautious with the upside, you could wait for a push above this barrier, the high of the 25th of February, near the 205 zone. So a nice, you can see that so far this 205 territory is kind of providing decent resistance. If we do get a nice push above it, then yes, we'll go for some higher levels, but we do have the next obstacle near the 213.70 territory, or we could go further for higher levels if we clear that. But I mean, for now, probably the main focus will be on this upside line, which, by the way, also kind of coincides here, or should I say, could coincide here with the 21-day EMA as well. So depending on how this is going to trade, and in a way, all this could provide a decent support here for Litecoin, and Litecoin could travel further north. If it breaks this and falls below the 21-day EMA, I'll go for a bit of a corrective move here towards this other upside line drawn from the low of the 11th of December. Now, jumping into a few pairs very quickly. Oh, by the way, I mean, before we go ahead with the pairs, just a quick update on a few indicators, a few economic indicators that came out. So Chinese numbers, Chinese inflation numbers came out quite well, I would say. They've managed to beat their forecasts. So yep, you can check that on the economic calendar as well. And yeah, the main thing to watch today, of course, will be the US inflation figures and the Bank of Canada rate statement. So the interest rate decision, of course, in a way, there's no surprises there, but you can always have a read through. If you want some more details on that, you can basically have a read through on our website. If you, let me just, there we go, just a second. So you can have a read through on our research page, basically about all this. So if you take a look at our weekly outlook, you'll find some information on the Bank of Canada. What do we think? And basically, yes, I mean, I believe it can be quite useful. Now, jumping into Aud Gpy, quick update. Basically, it still kind of goes in line with the idea that I discussed yesterday, basically when I covered Aud Gpy. Yes, we managed to break this downside line. Okay, but the fact that we're still kind of trading below this hurdle, this current highest point of March, I would say, at 84 territory, that kind of gives us a bit of let's say, that makes us a little bit cautious, I would say. So I would prefer to see maybe a push above this 84 territory first and then go for some higher levels. But again, given that it's, yes, we managed to break this downside line, okay, good news for the buyers, but let's see if we can manage to overcome the 84 territory. So far, I'm going to stick to this idea, looking at this little short-term upside line, and yeah, for now I'm going to probably take a bit of a cautiously bullish approach here, and then kind of yeah, I'm gonna wait. I'd rather wait for my confirmation break before kind of, let's say, jumping into anything too early. NZD JPY, similar story. Also, we need to see a push above that 78.20 zone. That's the highest point, the current highest point of from March. If we do get a push above that, then yes, higher levels could be met. For the downside, I need to see maybe a drop somewhere below this area, the 76, or let's round it up here a little bit, 77 territory. A nice good drop below the 77 territory. Basically that's what excuse me, that's what I'm going to be looking at. So 77 territory, that's what I need to see in order to consider the downside, because at the same time we'll get a break of this upside line, we'll get a drop below the 21-day EMA, and maybe more sellers could join in. For the upside, yes, the 78.21 territory is required in order to consider the upside. I can see there's a comment in the chat room, Klaus. The website seems to be functioning. Let me just refresh this very quickly. No, it's all fine. It looks fine. So yeah, you can visit us here. But yeah. Seems to be working. I think that was the other link that if you saw something showing you like there's an update or something that, but yeah, that was something else. Now, USD Cad. Now jumping into that one here. Well, again, I would say finally we're getting another push above this downside line. But to be honest, I mean, lately we do get these violations of this downside line drawn from the high of the 19th of March of last year. But we kind of stopped really taking that into much consideration, because we keep getting these little overshoots, but then at the end of the day, the daily candle still falls back below it. So we keep getting these false breakouts, but yep, that's not really kind of doing as much. But that's why I kept saying when I was covering USD CAD that the 1.2738 territory, that's what I need to see break off in order to go for some higher levels. So yeah, I mean, it's still going to stick to that idea, and for now I'm going to just keep on monitoring this one. For the downside, I need to see a drop below the 1.2590 territory. I would like to see that daily candle staying below it and then going for lower areas. Quick update on GBP CHF. So this one's a monster. It's a huge nightmare for those who are trying to short it. But basically, as you can see, yesterday, for example, we did push higher. We did overcome the previous March high, and we've hit the area near this level, the 1.2989 zone, so approximately around here. We just fell shy basically by a few points. We just fell shy by a few points, and from reaching the psychological 130 zone. Now, again, there's a lot of temptation, and to be honest, it seems that there could be a chance still that we could reach that. However, I would say that there is still a chance we could reach that in the near term if we continue to trade above this upside line drawn from the low the 12th of February, because then the pair could drift lower here, for example, test this upside line, then rebound and basically make its way up again. But again, we'll be very careful, because as always, that's something that a lot of traders are expecting, and that's why we want to be a little bit on the careful side here, because are we gonna get a test of that 130 territory now, or will it be a little bit later after, let's say, we see a much stronger decline here? But again, let's not rush into anything yet. If you want to be a little bit more on the safe side, guys, you could wait for at least a push above the 1.2966 territory here, and then you could start aiming for those higher levels, for that 1.30 territory. But if we get a break of this upside line and we see the daily candle remaining below it, then yes, of course, we could maybe go for a bit of a larger correction to the downside here. But again, for now, we are at a very interesting and tricky spot, so let's be very careful with that. And finally, EURUSD. So, continues to trade below this downside line. To be honest, again, not much is happening here with this EURUSD, apart from the fact that, yes, we managed to test the 200-day EMA. We managed to see a little bit of a rebound yesterday, and the same analysis remains basically that that if the pair remains below this little short-term downside line taken from the high of the 25th of February, I'll still consider the the scenario, or should I say the direction to the downside, the main direction to be to the downside. But again, let's be very careful with this. Depending on how DXY is going to trade, I mean, if it's not going to, let's say, break this upside line, if it breaks this upside line, then probably EURUSD could overcome this downside line here, and DXY upside line if it breaks that, for the EURUSD downside line. So getting confused here a little bit, but long story short, if we do see a break of this downside line, and we do see at least a push above the 1.1952 territory. Now, yesterday I talked about this hurdle, this 1.2023. It still remains for me the more important one. But if we could start already looking at slightly higher levels with a tight stop loss, of course, if we get a push above the 1.1952 territory. But again, you'll be the judge, guys, for yourselves. You know yourselves better. For the downside, I'm still aiming for the 200-day EMA for another test of it, and for this 1.18 territory, and then I'll pick up on this later. Okay, guys, thank you very much for joining in. Thank you very much for watching this one till the end. If you want to catch my video later on, my trader's tea time is always 13:30 GMT. For now, have a wonderful trading day, guys. Stay safe, have your stop losses in place, and yeah, everything will be fine. So, thank you very much, and bye-bye.